All right, what is up, everybody? Really excited to bring you today's video. It's going to be a little bit different than normal, and we're going to go over some much more macro concepts and explain them, and then show you what's actually happening right now, currently, and where we could be in the business cycle and the economic cycle here, basically in the middle of April, right before the tax filing deadline. So the first one we're going to look at here is a think script that I've come up with for the business cycle. Okay, so red is going to measure commodities. White is going to be your S&P 500. The blue line here is going to be bonds, and the green line here is going to be the US dollar. Now, this is your business cycle measurement via the stock market. Okay, and there's Pring-Turner's 6 business cycle stages. And so you have these periods here where you want to, buy bonds, buy stocks, buy inflation sensitive. And 2023 was definitely a year where you wanted to buy stocks. And it's definitely been an area where you wanted to buy inflation sensitive more recently. Okay. Now, these are 4 to 5 year stages, basically that we're looking at. And if we go back to our model and let's talk about inflation sensitive, so that's gonna be like commodities and energy. So the red line, you can see here has been really, really performing. This is, essentially showing you guys their performance since the beginning of the year. When it comes to the measurements that we're looking at, and we're seeing commodities, okay, things like energy, things like precious metals, I mean, just even if you look at cocoa futures, right? These things are rising. These things are performing very well. The EQRR, the equities for rising rates ETF, has been performing very well here. And the reason being is because, a rising rate ETF is going up because potentially at this moment, the Fed, is basically in a position where it's going to be kind of hard for them to cut rates because it looks like inflation is going up, right? And we've seen inflation going up all year. Bonds going down, right? Bonds have been in a downtrend basically the entire year. So if we go back to this is, after you buy inflation sensitive, you want to start selling bonds, and then it gets to a point where you want to be selling stocks. We're not necessarily there yet. We could be getting into that phase right now, right? If we go back to our chart here, I wouldn't say that we for sure have topped or anything like that. And the market can continue going higher. The S&P 500 has been in a bull market. But you see how commodities here are really just outpacing, right? And so this is one way to look at Pring-Turner's 6 business stage cycles. Here, it makes it a little bit simpler for you guys to see. So in stage 3, okay, you want to be buying technology stocks, transports, and oil drillers. Okay, so when we come back here, we can see the S&P 500, which is heavily weighted in tech, has been performing well, and commodities have been performing well here as well. Energy being one of the biggest commodities, oil. And, those drillers, a lot of those companies and oil-related companies have been performing very well. So we're in this period here where these stocks have been working. And then you see the next phase, it goes to oil drillers, then diversified metals and energy. This is exactly where we're at right now, in my opinion. The reason being is because metals as a whole have been breaking out very strong, right? Let's go over here to TradingView and let's just take a look at a precious metals ETF. This is Glitter. Look at this performance here. This is a weekly time frame that we're looking at right now. Okay, and if we were to just take a look here, I mean, this is a huge, huge move, guys. This stock went from 35, basically doubled, from the October low. So massive move in the precious metals ETF. Now let's go back over here to our business cycle stage. Diversified metals, that's where you want to be. Oil drillers, energy, right? We come back over here, we take a look at energy. Energy's been performing very, very well. XLE has had a massive move from 40, up here into the 70s. So huge, huge, massive move there as well. So when we come back here, I kind of can understand these things just by looking at this because I know how the model is built. But I wanted to show you guys individually, right? And so let's think about it. It appears that we're in this stage, right? We're in stage 4. And we don't know if that stage is really just getting started and whether it's going to last for the entire year. We don't know if it's about to end soon, right? But the next stage is going to be where you want to be in diversified metals and healthcare, okay? And then it gets to the point where you want to be buying bonds. For right now, I think we're in this stage. I think it's very evident by what the market is telling you, and not too many people are telling you about it, right? When I watch other YouTube channels or financial media or FinTwit and stock twits and things like that. Um, I'm not seeing too many people bringing this up, right? I think All Star Charts and JC Peretz and Straza, they've been doing a good job of highlighting this, but not too many other people are. But let's dive a little bit further, right? So that's the business cycle. Let's dive into the economic cycle model here. Okay. And so we've got expansion, peak, contraction, recovery. Recovery is in yellow. All right. Peak is in blue, expansion is in green, and contraction is in red. Right. Now we'll go ahead and just put this on a blank one right here. Okay, just so we don't have any bias. And we'll go ahead and take a look at where we're at. But before we do so, we want to take a look at the economic cycle. So again, I have them color coordinated here, and we're going to take a look and see, what's happening, right? And you'll see the outperformers based upon the color in where we're at right here in the model. So the blue right here, peak, has been the outperformer, okay? And if we go back to this is the cycle where you're seeing peak, okay? And then it starts to go into contraction. When we take a look at contraction, which is the red phase, that's potentially going to be our next one here. Okay. So the peak right here has been performing very well. All right. The green is going to be your expansion. All right. We're coming out of that. All right. Is basically where I'm getting at. Right. When we look at recent performance, this is really flatlining here. Right. And this is starting to, if we were to zoom in a little bit more, you can start to see this potentially starting to roll over here. Okay. And that's what I'm paying attention to is, are we coming out of an economic cycle? Are we coming out of this expansion phase here? And are we about to peak? Right. And when we're peaking, look at what the outperformers are, guys. It's energy and materials. Okay. Materials also fall loosely within that commodities sector. Okay. Lots of material stocks look really good. The XLB sector looks really good. It's pulling back right now. But before that, it went on a 2-3 month bull streak, right? Of pretty much just going straight up. Meanwhile, tech has been struggling a little bit, right? Especially relative to the S&P 500 as a whole. It's really been rolling over here recently. So that's something that I'm paying attention to right now, is that it appears that we're in the peak cycle of the economic cycle, right? And then when we took a look at the business cycle, we just went over that. So, I mean, these are all things that I'm paying attention to right now. And I have these different models in Thinkorswim kind of just to measure them, right? And so that's what I'm looking at. That's what I'm monitoring here currently at the moment. And I've also got this other model here, which is the EPR model. Now, this is an employment population ratio model. That's what EPR stands for. The measurements are here in the middle, but sorry about that. Essentially, you're going to be looking for this yellow dash right here. These are the signals, okay? And this is a monthly time frame thing, okay? Measuring like monthly employment numbers and employment population ratio. Um, it's getting a little scary, okay? There's been a few false signals, okay? Such as over here, we did have a false signal, but that was largely due to COVID. And, we know that due to a loss of the stimulus, yes, we had a very short-lived recession, but all of the stimulus really just pumped the economy. Over here, this is what I'm hoping for, okay? Because at the end of the day, I'm not hoping for a crash or hoping for a peak in the market or business cycle or economic cycle. And we're at this phase where we're just now starting to get yellow. But when we take a look at the past, and we take a look at, when we flipped into yellow, right? And when things have started to go yellow, that has marked, tops in the market. And it's marked recessions coming in to the market. And so, I'm just trying to stay ahead of the game, always keep an open mind. And let's just, kind of retrace a little bit, right? So when you look at the four phases of an economic cycle, it appears that we potentially are in the peak phase right now. This doesn't mean that we're immediately going to go into the contraction phase, but if we understand the cycles, we can understand the outperformers in the next phases, right? And then when we go to the 6 business cycle stages, again, it appears that we're heading towards that we're in stage 4 right now and heading towards that stage 5 where there's going to be a peak there as well. So I think that these are really sectors and things that you want to pay attention to and monitor in the market, because they could potentially be leading to contraction. And again, when we look at my employment population ratio script here, which I didn't invent this model, I just made a think script for it. And it's something pretty new, that a lot of people haven't really used before, but you can go back in all these periods of times, and when it flips to yellow, that's your warning sign basically that, hey, we could be about to be in a recession. And then the red is like, hey, we're in a recession. Right. And what do you see? We see these downturns in the market time and time again, whenever the model flips yellow. And, it's a warning sign to me. It's something that I'm paying attention to. And really just, I'm going to monitor this, right? Again, it's a monthly script right here. So it's going to calculate things on a month by month basis. So if this continues to stay yellow for the next 2 months, well, we'll see, could it potentially be a false signal as it was during the COVID time? Or could potentially it be another leading indicator that, hey, we could be heading towards a time period of contraction, aka a potential recession in the market. So I think that's going to wrap up the video. Something a little bit different, just taking a look a little bit more at some macro things. Obviously read through the disclaimer. None of this is meant to be relied upon as legal, financial, or investment advice. This is just for informational purposes, okay? If you enjoyed today's video, I did actually start a completely free newsletter for you guys. It's called Investment Intelligence. And I give out free, valuable finance and trading related content on there. I also try to sprinkle in a free trade idea in there every single week. You can check out the website. There's a website associated with it. The links for everything are going to be in the description down below. And you can also join the Investment Intelligence Discord. Okay, that's where I post all my different analysis. I post 20 plus swing trade ideas every single week in there. And there's other valuable resources such as custom scripts and indicators like the ones you saw in today's video. Those are actually available in the Discord for the Discord members. If you have Thinkorswim, then you'll be able to get those on your Thinkorswim platform. And many, many other resources too, right? You can see gamma levels inside of the Discord for any stock expiration date that you're looking at. You can take a look at dark pool levels and many, many other really cool features. It's only $10 a month. So yeah, links are in the description for all of that. Thank you guys for watching, and I'll see you in the next video.